What's going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. Always a pleasure to have you on today, John. How are you doing? How's the new year treating you?
All good here, Aaron. Thanks a lot for having me.
Yes, so I'm excited to have you back. Last time we spoke, we were chatting about the current state of the markets. What have you been up to since our last meeting?
Well, I did a European roadshow in November, spoke in Zurich and London, and I am an advisor to a new conference coming up April 29 and 30 in the States, in Washington, D.C. to be exact. So if any of your listeners are East Coast, I think it would be a great opportunity to meet them at the conference. We've got 60 companies already signed up. You and I have talked about clean energy a lot on your show. The elements that make up a Tesla battery, for example, right? Like those companies don't get a lot of love at conferences because so many of the US and Canadian conferences focus on gold and silver companies, right? So this will have nothing to do with those two elements and have everything to do with copper, lithium, uranium, et cetera. So we think that's going to be really exciting. And I put a lot of work into that. I also was interviewed by the Northern Miner about short selling and downticking in the sector because I feel very passionate about protecting investors as much as I can to at least educate them about what's happening. So I did that interview with Anthony Vaccaro's group, and hopefully that will start to get some more traction as we move forward. I know Eric Sprott did something in November as well. So
Exciting start to the year for you. So how are you positioning yourself for 2024 in terms of the markets?
yeah, so as of December 31st, we had about a 15% cash position. I got a little bit, I took advantage of some rising prices since that CPI read we saw November 14th. Not to say that that wasn't real, meaning that CPI was going down, and that's a positive for mining. It's positive for the broad market, right? But December 13th, the Fed really kind of acquiesced. And if you look at what the 19 members had to say, 17 of those members, I believe, were open-minded to cuts next year, which is really like a sea change. When you see something like that, like a real change in policy behavior, you have to appreciate that, whether or not you're long or short or out of the market. You have to say, wow, that's different, right? And we've been going down this path over the last, almost 2 years, you and I in these interviews, where it's been one way, right? It's like
Mhm.
we're raising rates, we're raising rates. Well, November 1st, he kind of backed off Powell, and then December 13th, he really backed off, and he was talking soft landing more than I've ever heard him talk. So, whether or not you're positioned for that, you got to get positioned for that. So we've been more aggressive in buying, copper stocks and things that maybe do better in an economy that won't get as trashed as people, including myself, had thought at one point. There's always that risk that the Fed isn't as accommodative as people would like, though, right? And so that's something we're always watching the screen for. January's meeting is going to be a nothing burger because January 31st is a 95% probability of just holding the line. But March 20th is going to be interesting because, as you were just talking about with me off camera, we had about an 80% probability of a 25 bip cut coming March 20th as of the end of the year. And that is now about a 60% probability. So when you get to that 50-50 kind of
Mhm.
level, you have to watch very carefully and read the tea leaves at that March meeting.
Yeah, it's going to get volatile. So, the next question, right on topic, we've got some upcoming Fed meetings on the horizon. What's your take on rates? Will we get a cut soon? What are your thoughts?
Well, I think the market, meaning the broad market, has baked in a cut in March, right? And if we don't get that, I expect some selling in the broad market. I would also expect some selling potentially in our market, right? Because you're starting to see this kind of melt up move, as I would call it, since mid-November in not only the market, but also our sector in certain names. And so not getting what we would hope for in March 20th might be detrimental to prices. But that said, I think it just gives you more opportunity if you're a value investor like myself to get involved in some of these names between, say, March and May. Because in the May meeting, there's a pretty decent probability that the Fed is going to come through for us and give us a cut, right? So if they're factoring in, meaning the dot plot is factoring in 75 basis points worth of cuts this year, they've got to get started at some point. And I think they'll get started by May if, we're looking at things as it sits today.
Sounds like cash might not be a bad, you know, portion of your portfolio. So just to be nimble, but I know your portfolio has a diversified approach to equities. Are there any companies right now that you're looking at for the new year?
Yeah, so as I said at the onset, with this clean energy conference, I'm challenging myself after 20 plus years in the space to learn more about areas that I don't have, as much experience in. For example, like uranium. I met Rick Mazer at Forum 3 years ago. He's taught me a lot about the sector, a lot about what to look for in a company like a junior, what to avoid. He's got 40 years of experience in uranium. I want to surround myself with people like Rick at Forum because I've been in the space for 3.5 years, right? I mean, when I worked at Sprott, Rick Rule would talk to me about uranium, and I was sort of like, what are you talking about? I wasn't catching that. I was looking at current prices then, and I was like, what does Rick see in this? Because there was no momentum, if you remember. And now there's huge momentum. If you look at the uranium price, it's done extremely well. So we bought, something like URA, which is a huge ETF in the space to get exposure to certain equities. And then we'll buy stuff like Forum. We're taking a look at Baselode Energy right now. Some of these names that look really good, that they look like they're basing. Like if you look at Baselode, they're just basing around 25 to 30 cents. And if you look at the 3-year high, it's $1.23. So will we get to $1.23? I don't know, but we're surely going to bridge that gap between 25 and $1.23 at some point if uranium keeps doing this. What's interesting last year is that the uranium price exploded, and a lot of names like Baselode and Forum, they moved, but they didn't move that much. And so there's still a lot of opportunity, I think, in that space. Another area that we're looking at is solar, believe it or not. The compounded annual growth rate of solar through 2027 is 22% in North America. So that market is still, you got a beautiful, looking pattern, and we're looking for names that are sort of flying under the radar. I talked, I think, on your show last year once about first Tellurium. Tellurium is an element that is heavily produced in China. Over 60% is produced there. And this particular junior is the only junior that's publicly traded that you can get access to that does, a lot of tellurium. They also have some gold and silver and other elements, but it's one property in Colorado, one property in Canada. Excellent news flow. I really like the CEO's approach. He defends, when you see weird price action in the stock, he'll put out a press release and say, we don't have any material knowledge about why the stock is down, this week so much. And, I like CEOs that take a stand, when things are happening to their stock. And we'll get to that in another minute because I have someone else in mind who has a similar approach. But another one I just started to look at today is Solarbank. They have just had a lot of good news flow as well, and the chart looks like it's basing. So I was getting interested in that more from a technical perspective. I've never really talked to anyone at the company just yet, but I plan on giving them a call later here in January. I've just been tracking them for a while. Getting back to that theme of CEOs that will take a stand, that article that I mentioned with Northern Miner also interviewed a guy named Terry Lynch, and Terry is CEO of Power Nickel. Power Nickel put out their 43101 on their NISC project the week of US Thanksgiving. So I think it got a little overlooked with the timing of that. You can't withhold material information from the market, of course. And so, the timing of that during tax loss season, I think, was not as opportune as Terry would like. But the numbers look really good to us. I think nickel juniors have just been crushed here. So it's like if you believe in a soft landing, you have to believe in nickel. I mean, it's just a fact. So we look for things like that. Another nickel name that we've been talking about on your show for at least a year now is Stillwater. That hasn't worked out as well. But in talking to the company, I don't see how this doesn't work at 11.5 cents. I mean, it is literally attached to a major in Stillwater, Sibanye-Stillwater, SBSW, and the jurisdiction is Montana. So every time I go back, and I think this is important for your listeners too, Aaron, is you have to go back and check yourself, right? Like you're not always right. So you have to go back and talk to the CEO or the CFO and say, hey, do you have enough cash? What are your plans for the next 6 to 12 months? Did I miss something here? Why is the stock down 20% from our last call? Like, and just every time I fact check Stillwater, it still looks good to me. So it's like, if you feel that way, you just keep adding to your position, and now that's become a top 10 holding for us. Um, and lastly, I'll just end with some gold and silver names because I know we've talked about those kind of things on your show. I would say Goliath Resources has really got my attention like the last few weeks. Rob McEwen, who I met with in Zurich, just added again to his position. I think it's in the high 4% range now, closing in on 5. Eric Sprott has a big position. Crescat's got about a 17.5% position. So when you look at those three entities, which are very well known in our sector, 30% of the float is accounted for. So that's one of the things I always talk about on your show as well, is like, don't just look at the capital structure slide on a presentation and get freaked out if it's 200, 300 million shares. You have to understand if 30% of that is taken by people that have no intention of selling at rock bottom prices, you're fine, right? I mean, you're going to be okay. The company isn't going to dilute into oblivion. So that's one we've liked. They have 90 to 100 drill holes to report on between now and I'd say April, maybe May. So there's going to be a ton of news flow, and I think investors like that, of course. We've also looked in the silver space and talked on your show a few times about Aftermath. Aftermath is going to probably have their metallurgical results, I'd say, within a few weeks. I mean, I know it's going to be in Q1. And that's a big deal because I think the market really misses that their manganese could be extremely valuable to their revenue growth once that is announced, and it hasn't been announced up until the met results that are coming. So if you get a surprise to the upside there, meaning that their manganese is battery grade, I think that's the words people want to look at. That stock should get a huge bid, in my opinion. I just think that manganese, again, like tellurium, like some of the things we've talked about on your show, is a rare element on the critical minerals list in the US. And China has cornered the manganese market. So it's like, here's a source of manganese in a place that isn't China, run by a good management team in Canada. And lastly, I'd say like Silver X is something that we talked about before. It's had an up and down year, no question. However, in talking to Jose recently, they look at their production numbers coming out here sometime, I'd say, in the next few weeks. And that will give us a good look as to how that news flow in September went, meaning that they cut some headcount and they had to stop production at the mine for about 45 to 60 days. That clearly doesn't help in a down market, but you have to look past that and say, okay, well, was it worth like a 50% haircut in price? Absolutely not. Like it's just really an attractive name if you're bullish silver right now in terms of a small producer.
Definitely. So, the start of the new year is always exciting, optimistic. It's a great time for new investors. Any advice for someone looking to get started in the markets this year?
Yeah. I'm always open to trying to help as many people as I can. And by help, I mean, I think a lot of portfolios are still positioned for 2020 when new clients come to me, right? And they're doing this, and that's not a strategy to just hope that your names are going to come back. You have to kind of be honest with yourself and say, okay, am I positioned for 2024 given what I just said about the Fed, or am I positioned for a different market? And if you're positioned incorrectly, you're going to miss a lot of upside. So if it's not me, you have to align yourself with a professional that's going to help you with these kind of things. I don't get involved, Aaron, with like buy, sell, hold or anything, just in full disclosure. But what I do help people with is helping them understand some of the things we just talked about. Like, because I talk to company CEOs every week, and I know some of the people that come to us don't have time to do that. We've attracted some really interesting people in the last couple of years in many different professions. They're just too busy to do this kind of research on their own. That's where a lot of people use our services. So we have the newsletter that we've talked about on your program before, which is very affordable. But we also have an active service where we basically email people stuff on the macro, stuff about the Fed, stuff about something unfortunate like October 7th with the Israel Hamas, stuff and what that'll mean for mining, because that stuff happens on a weekend sometimes, right? You saw the Houthi situation happened right, on a weekend just a week ago. It's on a weekend, right? So like we're putting stuff out to people so they're prepared for the open that following Monday.
Awesome, John. Well, I appreciate all the updates. It's always a pleasure to chat with you. I look forward to some rate cuts, whatever happens
Me
this year.
too.
It's gonna be it's gonna be an exciting year. But usually when the cycle starts to, we get some more accommodative policies and interest rate cuts. That's when things get fun, especially for the precious metal sector. So, but we're not just looking at precious metals anymore. We're open. So, yeah. Long story short, it's going to be an exciting year.
I agree.
So we'll have to have you back on soon, and we'll chat soon, John.
Thanks, Aaron.